Hello, everybody. My name is Richard C. Wilson. I'm the founder of InvestorResidences.com. I run a 28-person team. I started our business 16 years ago. We've hosted 190 live events through our investor club, and what we offer is a 100-property vacation fund where you get equity in this portfolio of assets that buys property at low prices by offering all cash typically or seller financings. We buy it way below list prices and typically are selling it higher by gathering these assets together in a portfolio and doubling their sleeping capacity. Let me show you real quick in 5 to 7 minutes exactly what we do and some of our strategies and 8 of the transactions in our fund that you can have equity in if you invest with us as a partner. So first off, what makes for a great investment? In our case, it's our team, the fact that we're a super host, we're great at running these properties, and you're getting diversified exposure to 100 plus vacation properties that you'll have equity in through the fund. We're buying low and selling high through doubling the sleeping capacity. We're probably the only vacation property fund you've ever considered. We're also the only real estate investment fund you've ever considered where we do not charge upfront acquisition fees. We don't charge annual asset management fees. We don't make a profit or charge you any asset management fees across our whole model until you get all your money back and then have doubled your money. So we found that to be the most aligned structure we could possibly come up with. Family Office Club has been our business for 16 years. This is how we gain the intelligence to negotiate these deals, structure them, and you'll see how creative and exciting some of the transactions are in here that are not normal, and probably you've never done deals on these terms before, and you're leveraging our ability to strike great deals by investing alongside of us. We own billionaires.com. We're interviewing 100 billionaires there. We have 4,000 plus investors in our investor club, and I closed on $85 million of transactions just last year. Here's a picture of our team. One of our advisory board members is Joe Williams, the co-founder of Keller Williams with 173,000 real estate agents. He's also invested his cash in our fund. So that's one edge we have on top of other amazing team members. Here's a picture of Joe and I at our annual investor summit, which we had 1,400 people at this event and 130 speakers on stage. We have an average rating of 5 stars over the last 30 days. In general, we have about a 4.92 rating since we launched our platform. A bunch of reviews that we can show you, of course. You can find our Airbnb listings on the portfolio page of InvestorResidences.com. Here's a notice of us becoming a super host about 2 months ago. We became a super host in part because of Buy More Time that manages all of our communications for us. This will be important to understanding our asset number 8 in the portfolio. Institutions love apartment buildings. They own 25% of all of them. They don't love vacation properties yet. They own less than 1%, but they're pouring their money into single-family residential. But they still only own 2.4% of single-family residential. Eventually, that money is going to come to vacation properties. As we aggregate portfolios of 300, 500, 1,000 assets, we're going to be able to sell those in part or whole to institutions down the road. This is our first property we bought in the portfolio. We did high earnest money, all cash. We closed in 14 days. And this property was purchased for $1.05 million, and it's now worth $1.5 million just 14 months later. At the time we bought it, it was worth $1.33 million, and we got it for $1.05 million in the hottest real estate market the U.S. has ever seen. This was in the fall of 2021, before rates started going up. The transaction I want to show you next is one done on unheard of terms. If you're familiar with preferred returns in real estate deals, you probably know that everybody likes to offer 6 to 8% preferred returns and a profit split on the back. We are unusual in our model. We double your money before we charge you any fees. One of the 20 transactions going into this fund, we negotiated for your equity to go into another co-investment of 70 vacation properties, so mass diversification, and we get 16.5% preferred returns and then a 50-50 profit split after that. That's about double the annual preferred return that most people will offer. And it's a sweetheart deal because we get to leverage our big parent company investor club. They want to be friends with us. They wanted to thank us for the help we've given them in the past. And they want to unlock sources of capital through us. And so they gave us these amazing terms as one of the 20 transactions in the fund. Another one is this Jurassic Retreat property. This is in the state of Washington. It was going for $1.3 million. We secured it last month and closed at $1.05 million. Seller financing at 6% and change over 7 years, has national news coverage. There's nothing like this on Airbnb. It doesn't matter how crowded the space gets. It's a really unique experience asset, and we can stamp these out now in other locations. Here's another picture of the life-size animated dinosaurs. Transaction number 4 is in Sedona. 3 million visitors a year to this area. This is one of our most exciting investments. We got 1 acre with 3 properties on it for $925,000. We expect it to double the money for fund investors in about 4.5 years. Here is what it looked like before we beautified the property. It looks like you would need a tetanus shot to go inside that kitchen. Here is what it looks like after the renovation. And the sleeping capacity is 30. Let me show you why that matters for transaction number 4 in our fund. This is where it is, by the way, 0.2 miles from downtown. You can see that strip on the left. It's an amazing location. You can walk to the downtown area in Sedona. If you look at the yellow highlighted area on my screen, this is within AirDNA showing Sedona. There's 2,851 competitors on Airbnb. That's a lot of competitors fighting for those 3 million tourists. But that's for all sizes of properties. You sort by 6 bedrooms and 20 people or more. Actually, this is 6 bedrooms and 16 people or more. And there's only 9 listings out of 2,800. Most properties do not sleep more than 8 or 10 or 12 people. We go for properties where we can double the sleeping capacity. Just about every deal we do, we're getting that sleeping capacity to 14, 16, 20, 30 plus people. Our Sedona property will have over 6 beds and sleep well over 20 people. We expect it to be sleeping 30 to 35 people max in the Sedona asset and be one of the top 3 assets in the Sedona marketplace out of 2,800 assets. Transaction number 5, this is where we were able to go back in time and invest in a fund where in 2021, the value of a lot of the assets in the fund doubled, but they didn't technically fill up their whole fund. So we negotiated to allow us to invest at the same valuation that investors came in at in early 2021 with our fund's money, and that was transaction number 5 that we closed. That's an example of another creative investment that sophisticated investors do. And our fund, it doesn't matter if you come in early or late, you're in there until you double your money and then you're out and you have a vacation credit. In other funds, it's much, much better if you come in really late in the fund because you already know what the investments are, the real estate assets are already fixed up, they're already cash flowing. It's a much better return on your money. Transaction number 6 here is Surfer's Dream. This is a property in Florida we're acquiring right now. It is worth $2.7 million at the top of the market. It was listed at $2.2 million 90 days ago. We're acquiring it for $1.71 million. We're closing in 11 days, depending on when you watch this video. We might have already closed. We might be closing in a couple days. This should have 10 to 13% cash-on-cash returns, and we expect to be able to double the investor's money off this transaction in 5 to 8 years. This one's exciting because it's oceanfront, and it's ran by a true mom-and-pop investor. This is their only asset, and they were living in one of the 4 units. They don't have any software. They're charging the same price for spring break, summer, winter break, Christmas, Thanksgiving, holidays, events going on in their local area. It doesn't make sense to use 20 different pieces of software that we use to optimize our pricing intraday and optimize all of our listings and stay on top of communications in 3 minutes or less if you just have one property. It just doesn't make sense. With the ROI wouldn't be there in spending that money on all those pieces of software that we have dialed in as we build this institutional platform. Here's how close it is to the beach. There's also an opportunity to add on and buy the property next door and expand this to 14 units instead of a 4-unit oceanfront complex. So we're excited about that value add play. Transaction number 7 was in the Grand Canyon. This was a trading outpost for 50 years. That's why it looks like that on the outside, real rustic. There's nothing else like this in the area. We sourced this off market, again with seller financing. They wanted $1.5 million. We paid $1 million plus furnishings. And the seller financing is over a decade, and it sleeps more people than anybody else in the Grand Canyon Junction area. And the Grand Canyon gets 3 million visitors a year again, just like Sedona. Here's what the inside looks like. Super rehabbed, nice, clean, very updated. People say this is the best Airbnb they've ever stayed in. I've had multiple people say that after staying here. So very unique, just like the Jurassic Retreat property. All right, transaction number 8 here is just as unique as the 16.5% preferred return deal you saw earlier. This, again, is a sweetheart deal that you would just not normally be able to negotiate. We had added value to the owners of this business, so we had a 2-hour lunch with them. We added more value and gave them one strategy that within a month, after 7.5 years managing 42 Airbnb assets, managing all their communications, we gave them a strategy that doubled their business, not doubled their business, but they went from 42 to 70 assets under management in 1 month because of a lunch we had together. And they said, Richard, we need your help. We need your brain. We want your skills, and we want to get exposure through your investor club. We want to make you a partner in our company. We will give you 33% equity in your business. I said, great, but what I want is to double my investors' money in my fund. So I want you to manage all the communications for our properties for free, which would save us about $10,000 a month over time. And I also am going to structure this so that all of the dividends, profits, or capital gains from this company growing, scaling, or selling one day in the next 5, 7, 8, 10 years will go towards the fund until our fund investors have doubled their money. They have the intelligence of managing 30,000 nights booked. They use over 20 different software tools on top of the software that we use. And this is just another way where we're going to be able to goose the returns potentially and for sure lower the costs while staying as a super host and staying on top of all communications with our guests. So I hope this shows some of the creative, sharp thinking and negotiations that we've done within the fund and how aligned we are and what happens when we don't make any money until you double your money. We want to do ideas like this that just make it great for the investor. So if you want exclusive experiences, you want to stay at some of these vacation properties, double your money before we make $1 off of your money, which is in our mind how it probably should be with any investment advisor, them not charging you a whole bunch of fees before they've really gotten your money back. If you want to hedge against inflation, quarterly profit shares, a tax-efficient investment where you're getting a K1, bonus depreciation, cost segregation studies we do, etc., then this could be a great fit for you. Howard Marks wrote this book. He's one of the billionaires I've been studying since we bought billionaires.com and started interviewing 100 billionaires recently. And he wrote this book called The Most Important Thing. And he says when other people get pessimistic, you should be optimistic. When other people sit on their hands and they say, oh, there's risk in the market, that's actually when there's less risk because you're buying everything at a discount. We are buying properties at 20 to 30% off list prices. We're doubling their sleeping capacity. And that is how we buy low and sell high. The Wall Street Journal says that the luxury home market has had its biggest decline in a decade, and it's like crickets. That is the time when you want to start buying, not 18 months ago when everyone was in a fever, super excited, throwing cash at everything. So if you want to learn more, if you want to invest with us, if you want to work with us, if you just want to have a phone call, bounce ideas off us on your own vacation properties, contribute a vacation property you have into the fund, get help managing a hospitality or vacation property in terms of short-term rental management, reach out to us at investorresidences.com. You can text me at 305-333-1155 or just shoot an email over to richard@investorresidences.com. Thank you.